market today, there's a lot of space, as we all know. And so the question comes up a lot of times is we have a vacant space and we want to improve that space. And as a tenant, how do you improve it? And a lot of times the cash reserves are not there for owners to put the funds into improving that space for the tenant. And so today on our CRE Q&A, we have Eric Woodstrom, who's going to discuss questions that we have regarding tenant financing for tenant improvements.
That's an issue that's come up more and more as landlords are constrained by their cash flow. We have values have dropped, and they may not have the equity to be able to make tenant improvements or offer a tenant improvement allowance. But from the tenant point of view, there is opportunities available to get financing on it. The financing would be from their bank, someone that they have a relationship with, and would be based on their ability to pay, their financial strength. We'd amortize the loan over the life of the first term of the lease. If it was a 5-year lease with options to extend, we'd look at it being repaid during that first 5-year period, likely, because if the tenant were to move, then they wouldn't have the benefit of those tenant improvements. But it's certainly something that they should talk to their banker about, and it is available.
So there basically is an option for tenants out there to finance their own tenant improvements in this building that's owned by a different person.
Yes.
And so there wouldn't necessarily be, it would be unsecured then?
We wouldn't be able to secure it by the improvements. Once they're built, they'd be fixtures and owned by the property owner, not our borrower. So we'd probably take a lien on their business assets, a normal UCC lien on it, and a guarantee from the principals behind it.
Okay.
But it can certainly be done and be commonly done. Another alternative is there may be small business administration or SBA guaranteed financing for those tenants that maybe don't have the financial strength that we would want to do on a direct basis. And so that's an option that the tenant ought to talk to their banker about too. And the benefit of the SBA is you get longer term amortization out of it and maybe less upfront investment by the tenant.